Stocks are down and investors are weary, but bonds are up, so simple side investors are cheery. Hey, shareholders, welcome back to the Saturday send out from the simple side. And yes, I am going to see how many more S's I can fit into that intro. I am super pumped to jump into the newsletter today, and we're going to do it quickly. But first, I wanted to mention some exciting updates that we have coming out for paying subscribers soon. I will be very soon releasing the Simple Side stock portfolios. There are multiple ones that I am operating, but I'm about to share all of those with paying subscribers. I had a paying subscriber reach out to me and ask to see what the holdings currently are, and I realized that I haven't shared those with you guys. And so we are going to build that out and send it to everybody. The next article that I am probably going to send out to everybody is the How to Trade My Newsletters article. And this is going to be focused around this newsletter that comes out on Saturday and the other one that's mainly for paying subscribers that comes out on Wednesday and came out on Thursday last week. And so I need to decide if we were going to keep that Thursday schedule or if we're going to switch it up and stay with the Wednesday schedule that we've been doing before. Either way, that article is going to help you kind of decide how you want to pick apart these newsletters and what you want to trade on and what you don't. I've tried to make it easier. So in this newsletter, you'll see that I have buy, watch, and sell opportunities listed that I see in the market. The next thing that we have coming out after that is my investing strategy updates. And so what this is going to be is just basically the frameworks that I use when I'm investing in these portfolios. I'll probably do this hand in hand when I release the portfolios article and just explain what each of the portfolios are, how they're set up, and all of that good stuff. And I think I'll probably be releasing 3 portfolios. I have a couple different investment accounts, and they all have different sums of money, and they're all spread out differently. But I have them all set up the way that they're set up for very specific reasons, and we'll get into all of that in those newsletters. So we have stock portfolios coming out. We've got How to Trade My Newsletters coming out. And then we have the investing strategies coming out. And last but not least, and actually probably most important, I am about to introduce a crazy cool profit sharing model for founding members. Just to give you a little sneak peek, basically what's going to happen is I am going to let some of the shareholders, and for those of you that don't know, a shareholder is someone who is subscribed to the Simple Side. I'm going to let some of the shareholders buy equity in the newsletter. So what they're going to be able to do is pay a one-time fee. And what's going to happen is as my newsletter grows, as the profit grows, as everything grows, I'm going to pay them out. And so that is going to be a super fun thing to announce. I'm really pumped to get that done. But before we get into the rest of the newsletter, I just want to announce that I'm going to be upping the price for the newsletter from $125 a year up to $200 annually. And before everybody freaks out and starts to hate me for upping the prices, if you have already paid, you are grandfathered in at $125 a year. If you subscribe from this newsletter, you will be grandfathered in at $125 a year. And if you had any kind of, deal or sale price, you're grandfathered in at that price. So I think today's newsletter is probably going to have a 20% off somewhere in there. So if you can find that 20% off in today's newsletter, click that, get the 20% off. That brings you down to $100 a year, and that is a smoking deal. So the reason that I'm upping the price is due to the most recent bet, the most recent contrarian trade, if you will, that I had, which was a bet on bonds. And back in October of 2023, I recommended buying bonds. And since then, we're closing in on 1 year of that trade. Since that trade happened, I'm going to be closing those positions, or I could close those positions now in 2 different stocks, TMF and ZROZ. They're not stocks, they're bond ETFs. I'm going to be closing positions in both of those, or could close positions in both of those, up around 50% and up around 65-70% now on the other. And so 50% returns in a year. If you have $400 invested in the stock market and you followed that trade, well, you just returned your $200 annually and I'm sure you have more than $400 invested. If you don't, keep my free version, read all the good stuff that's coming out in the free parts of all the articles that I have, and then start investing slowly but surely and build your way up to that level. So anyway, today is going to be the last day. Well, I guess today, Saturday, Sunday, and Monday are going to be the last 3 days to get in at the discounted rate of $125 annually. All right, now let's get into the weekly recovery. Another week of outperformance. That's what we like to see. So this week we beat the S&P 500 by 2.53%, which translates to an annualized outperformance of 131%. So that's awesome. Over the past 7 weeks, we've averaged an outperformance of 1.02% over the S&P 500, which of course translates to a 52% annualized outperformance. So I'm really happy with that. If you look at our little infographic we've got here, you can see this week's outperformance. You can see the average outperformance numbers. You can see the historical outperformance numbers as well. And you'll notice that we've only lost to the S&P 500 2 weeks so far, and we've been doing this for 2 months. So really happy with those returns. And then the other thing that I want to direct your attention to is the stocks from the newsletters tab. This is where I go through the Wednesday and the Saturday send-outs that I've had, and I pull all the stocks that I said were buy opportunities or that I thought were buy opportunities, and I congregate them into this list and then show the returns, and then that's how we come to the average. And so what you can see here is what saved me this past week was TMF and ZROZ. TMF was up 10% for me this past week, and ZROZ, these are both bond ETFs, 10% on one and 2% on the other. And then, of course, we had PG, 2%. PG, of course, is Procter & Gamble. Then we had Philip Morris PM up around 2% as well. And then I have my recommendation to hold cash in here for September. I had mentioned this 2 weeks before the September market. I said start stockpiling cash. So I have that in there as a 0% return. I guess you could say if you count it with inflation, it's a 2% annual, and then you break that down monthly, but there's no need to do that. It's basically a 0% return. And then I've got some of the other stocks in there. So I'm really happy with the way this week came out. I expected this to happen. If you're reading the newsletter, if you want to read the newsletter, there's a little bit of an explanation for each of the sections that are in the graphic there. You can go through and check that out. But I want to get us into politician trading. So, of course, we track the two ETFs, NANC, Democrat trading, and KRUZ, Republican trading. So these have been doing pretty rough. I think this is due to a lot of the holdings being in NVIDIA for both parties. We have the Democrat trading ETF down 6.03% this week. That was brutal. It is still up 1.44% on the month and 14.83% year to date. Then we have Cruise down 2.16% this week, up 1.8% over the past month, and only up 9.17% year to date. So I'm not super happy with the performance on these two ETFs. I really did think they were going to be performing better. I do think that when the market turns and we start going back in the direction of green again, that these ETFs will end up outperforming the SPY, which is usually what I track everything off of. And if they don't, I'll continue to report on them. I think it's very interesting, but I will likely shift my portfolio into other assets. So what's fueled the 1.44% for Nance and 1.8% gain for Cruise? Well, over the past 30 days, 11 politicians have made 38 trades, moving $520,000 around in the market. This is actually a super slow month for politician trading. Usually we're seeing millions or multi-millions of figures being traded. It's funny. It's like they almost knew that things were going to drop, and so they held off on reporting all of their sells, and they held off on reporting all of their buys. So isn't that something interesting? Of course, we have the top 5 most recent politician trades shown down there. The only person who is on the list for these top 5 trades is Miss Taylor Greene, the Republican from Georgia. So she made 5 purchases, believe it or not, kind of surprising, but I guess she's buying the dip. She bought basically a couple of the big 7 stocks and then a couple of interesting buys here. So we've got Alphabet, also known as Google, Amazon, and we've got Apple as 3 buys, and those are the big 3. All traded between, well, I guess the range for all of these stocks is going to be between $1,000 and $15,000. And then the other 2 more interesting buys are Charles Schwab and Corning. So if you guys don't know, Corning is a glass maker. They make like screens. I say glass, it's not really glass. They make screens for phones, computers, laptops, all the good stuff there. And then, of course, I'm sure everybody knows Charles Schwab. So that's an interesting buy. Schwab has been getting crushed recently in the market. I think they're down to their 52-week low. So that will be really interesting. Schwab recently acquired, let's see, I can't remember what it was, but a trading service. Oh, man. It wasn't TD Ameritrade, was it? I'm not sure. Anyway, they acquired a trading service. So interesting to see the fact that they have performed so poorly. They were once, of course, like a huge name, great company. So we'll be interested to see where that goes. But with Miss Taylor Greene's portfolio performance, I want to talk about whether or not you should trade on all of these buys that she just made. So I went through and pulled her records since May of 2024, and her returns have been 4%. So that's not really that impressive. It's also not underwhelming, but I don't think it deems any of the trades that she makes to be super worthwhile or worth replicating. That being said, I've been vocal about my long position in the screener glass company, GLW, and I like that company. I like that buy. I think we are missing the mark on how valuable that technology is. I sold positions in OLED and GLW earlier in the year, but I have been keen on picking these stocks back up after their valuations come back down a little bit. They were both in very high valuations, which is where I sold off. So I'm waiting to see those come down a little bit, and then I'll probably end up adding more to what I am still holding there. So politician trading, key takeaway, not really worth trading on anything here, but there are still buys happening in the market. All right, let's get into insider trading. So we have another ETF that we track here, ticker SURE, Sure. And Sure is down 1.96% this week, up 3.56% this month, and 7.89% year to date. So Sure is actually also underperforming what I thought was going to happen. Slightly disappointed in this as well. Again, I will see how well this performs, and if it starts to pick up, then I will be more than happy to add position to it. If it continues to perform poorly, then I will be taking money out of this and putting it into more valuable assets. That being said, we have some really interesting insider purchases from this past week. The 2 largest are PBF Energy and Talos Energy, which if you've been following me for a while now, you know that these 2 tickers have appeared on the largest insider purchases every week for the past month. They've all been bought by this family office, the Control Empresarial de Capitales. So basically, what this is a family office that's run by the richest man in Latin America, Carlos Slim. And he has been putting tens of millions, hundreds of millions of dollars into both of these energy companies. And so finally, I've given up on being like, wow, this is really interesting every week. And I'm going to put small positions in both of these companies. I'm tired of seeing them show up all the time and just watching their valuations go just continually down. So both stocks are trading near or at their 52-week lows. PBF is at $32.14, around that area, which is its 52-week low. And Talos Energy was bought at $11.08, which is only $3 off its, or really $2 off its 52-week low at $9.81. So these valuations, the amount of money that they're pouring into these stocks at these valuations just doesn't seem to make sense. And a lot of times when something doesn't make sense, it means there's an opportunity that someone else sees that you don't. And so that's why I'm going to put a little bit of money into those. I'm not going to recommend these as something that anyone should buy. I do see them as a buy opportunity and have it listed as such in the newsletter. But what I'm going to do here is I'm going to put about 50% of what I would like to invest in both these companies. That's what I'm going to put in at market open on Monday. And then I'm going to wait to see how everything plays out through September and the rate cuts that are going to come on the 18th. And if things drop again, I'll be happy to dilute the shares down. If they start to perform well, then so be it. I missed out on a little bit of extra return, but I won't be too upset about that. I'm not going to go through the rest of the insider trades. You guys can go and check all those out. I do want to report that over the past 60 days, ticker TEAM is down 32% year to date, and it is also the most sold stock by insiders with 86 sells and 0 buys. So this just shows how important this information is and how tradable it really is. And then I also want to hit on TPL, which is up 50% year to date. That's Texas Pacific Land, I think. They have 40 buys and 0 sells. So you can see how important this information can be. All right. Let's move on, though. Oh, look at that little surprise discount button right there. Don't skip to buy that. This is, of course, like I said, the last weekend that you're going to be able to get in at these lower prices before I up things due to the outperformance of our portfolio. All right, let's look at the executive trading report. This, of course, tracks all company executives that are trading in the market. This week we had a total ownership change of negative 12%, which, again, if you've been following for a while, you know this is not typical at all. The most recent buy was Michael Taglich, who bought INLX, which is now up over 92% year to date. I find the company to be grossly overvalued where it's at right now and do not see it as a buy opportunity. And in fact, I have a sell opportunity, not for INLX, but for another company that is on the top of our officer purchasing report, which is Ares Management, ticker ARES. I actually like this stock as a buy. I had it bought a couple of years back and sold when it hit a nice little high, but 13% decrease in share ownership from the CEO and 2 co-founders. I see the sell-off as justified. I think the stock right now is currently overvalued at around $145. I think it should be trading at a fair market value of $70 a share. And so if things bump down to $70 a share, I'll see that as a buying opportunity. But for now, I see this stock as a shorting opportunity. There's no way that it's going to continue at its current valuation. And seeing all 3 co-founders sell shares, it's basically just it's like them telling you they don't think the company's going to perform well. So I definitely think short opportunity there. Now, if you are reading through the newsletter along with this, I would like to say please go fill out this form that I have on there. Basically, I took out what I normally report on right now, which is the top and bottom, so best and worst performing stocks of the past week. And I want to know what you guys want me to replace that with. I felt like it just wasn't a valuable or tradable or actionable information. It's cool to look at, but I just don't think it's worth the while. So go on there and let me know what you guys want me to replace that with, and I'll be happy to replace it. All right, well, this is where I typically sign off and let you paying subscribers go through the rest of what we got on here. Of course, you have the TLDR summary, also known as the too long didn't read summary. So if the paying subscribers, if you guys don't want to read through the entire report that I have for you on this past week, you can just look at that little picture that I've got there for you that has all of the buy opportunities, all of the watch opportunities, and all of the sell opportunities that I see. I think there's some good stuff in here. I definitely think there's a good frame set to be built around what I have written out for everybody here. Basically just how you can avoid the poor performance in the market during September and basically during any downturn. It seems kind of contrary to buy bonds when rates are low. And for a lot of people, it might not be the best time to buy them, but There's other things, and I have a lot of them down here. I have some commodity trades that are available to be made. I also have around, let's see here, 1, 2, 3. I have 10 stocks that I have listed as either buy or watch rankings, and they all come from one chart. And so if you are wondering what that one chart is, go ahead and hit that button that I gave everybody there, and that's a 1-day free trial. Just lets you kind of check out what I'm giving the paying subscribers. So get that 1-day free trial. Just go and check out everything that is down below, and just see what paying subscribers are what I'm giving them. That's getting us, 2.53% outperformance weekly on the S&P. So I look forward to seeing you all next week again. Make sure you get in on those cheaper paid prices, and I look forward to doing this again next Saturday.